All right, I know. Weekend's over, back to work. We got some money to make this week. FOMC coming on Wednesday. Got a big week ahead of us. And boy, do we have a very important video to kick off the week this week. We had some big moves down on Friday. The Bears are in full control right now of all the momentum on these charts right now. But have you seen the 60-minute? Because when you look at the 60-minute chart right now, we're in this big old range. I'll tell you, it smells like a beautiful spot for a bear trap and reversal going right back where we came from last week. I've got some great bear traps on my radar. Definitely some long trades for tomorrow. I got a couple short trades because the Bears definitely have all the momentum. So we have a lot of great trades we're tracking for tomorrow, and you know how we do it. I'm going to cover my favorite trades on the video tonight that will use a game plan to make some money on Tuesday, just in time before the FOMC announcement on Wednesday. Now, before we jump in, though, and get our hands dirty on these charts, a lot of great trades we'll talk about for tomorrow. Before we jump in, though, make sure you subscribe. I don't want you to miss tomorrow night's video, so hit that subscribe button. And if you guys enjoy these lessons, if you like these videos, do me a favor here tonight, will you? Hit that like button for me. Give me a shout out down. Say hi in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, though, Joe. Let's get ready for Tuesday. Get a lot of good trades we're tracking for Tuesday. Starting off tonight, of course, as always, on the 60-minute chart on the Nasdaq and the Qs, and of course the Emini and the SPY. As I mentioned, there is no doubt about it. We are very bearish here in the short term right now. But if you guys know how I trade, right? Ranges act like magnets, and we've been rotating back and forth around these highs and lows of this range here for what seems like forever right now. A lot of bears going lower. Hopefully these bears try to sell this thing short down here, because I would love to run their stops and squeeze this thing back up into that trading range. So horrible place to be a seller. Hopefully they do, though, because a lot of buyers right now looking for traps going back up into that trading range. So got a lot of great reversal trades we're tracking for tomorrow. Now, before we jump into tick charts, though, before we talk about the specific entry setups I'm tracking here for tomorrow, let's double check the calendar for tomorrow. There really isn't any major news on the schedule for tomorrow. We're still watching that auto workers strike that happened on Friday last week. Not much updates on that. We get some minor stuff tomorrow. The housing starts at 8:30 Eastern time. I don't think that will be a big market mover. Everybody is basically looking forward to the Wednesday afternoon FOMC announcement. So no major news for tomorrow. I'll keep my eyes and ears open tomorrow for any unexpected headlines, especially if that auto worker strike starts to accelerate a little bit. It's a wide open day here for tomorrow. Now back to our charts, though, right? Because obviously the money is made on the charts. Let's go over my favorite trades here for tomorrow. I mentioned earlier we're looking for bear traps going back up into this trading range, but let's dive in now. Over on the 60-minute, over on the tick chart. Excuse me, it's a Monday. It's a Monday, isn't it? I like to use tick charts because everything is easier on tick charts, especially entries. This is a 7,000 tick chart if you're watching for the first time here tonight, and that is the 21 EMA. Not the only indicator we use, but the most important indicator we use in our trade room every morning. There are two really important components on the tick chart right now that'll tell us where the best money-making trades are going to be here for tomorrow. The first thing we're going to keep in mind is that overall bearishness, right? Overall bearishness, it's almost like a weight, right, is on top of these markets. That's one of the most important factors here for our trades tomorrow. The second one, which is also very important, is this bullish move into a trading range. Now, you guys are learning about this in our free trading classes, right? In the free trading course, we talk about how ranges love to rotate. They love to rotate. So it's a bull market, short term, of course, into a trading range, and the buyers have one thing on their mind. They want to go back to the high of that range and then want to continue. They want to take out what we call the pendulum swing on the other side, which is basically the amount we go below the range to the amount we go above the range. So buyers are trying to find a way to get in, right, on the way higher, and ultimately keep the party going for a breakout going higher. This would normally be a very straightforward and easy situation to trade, but again, you've got almost like this invisible hand of those bears, so we have to be prepared. We have to be prepared for sellers to try to take out some of these lows. If you go back to the 60-minute chart, you'll notice we still have not taken out that big low of September around 44.83.5. I would still love to look for long trades. Even if we do take out that would be a very good place to be a buyer back up into that range here. So again, anticipating this rotation going higher, but we have to be prepared for sellers to be trying to keep this party going lower. Whenever I have these two situations, we have this kind of conflicting signal right now. Overall bearish, but short-term bullish. I want to be a buyer. Again, I can't understate how difficult it is to short down here. Very difficult to sell short, right? So it's not a good idea to be selling short in this area. I want to sell off the high of a range, but not below the low of that trading range. So I'm anticipating bears are trying. The name of the game, though, is bear traps, right? Bear traps are going to be likely where the money is made here for tomorrow. Now, let's talk about how we can do this, right? Because as we go higher, as this market rotates higher here right now, there's one pattern on our mind, and those are they're called trap patterns. Well, in this case, it's a bear trap. Now, these are very simple patterns, so don't overcomplicate this process. You want to see higher highs in price and a trap below the low. Now, in my free trading classes, we talk about the signal that you need. The signal needs to be just below that prior low. Nice, strong green candle, convincingly strong, closing above the 21 EMA. This could be here, right? It could be up here, right? It could be really anywhere on the way back to retesting these highs, right? So bear traps are absolutely the name of the game here. Higher high in price and traps, because again, we have to buy as low as we can. We're anticipating this rotation higher, but again, the higher we go, the more the more sellers are expected to be waiting up there. If we go lower, right? If we try to go again, not that low, right? That 83.5 level, that's that 60-minute chart low I said. If we go lower here, it is virtually the same exact game plan. Let those bears try a couple times, and we have to be focused right now until momentum shifts. Until the 60-minute gives us more bullish momentum, we have to anticipate there are going to be quite a few of these bears here right now trying to take out that, 87 low, right? 83.5 low. So the name of the game here is bear traps. Now, the one adjustment I would make on this would be if we do end up rolling all the way down to that 83.5 level, that is what we call in our video classes the objective, right? The sellers have an objective right now. Their objective is to take out that low. Once they reach their objective, we have to assume that all the big money traders who are selling high, they're going to be taking their profit around that low. So if we do take out 83.5, we then, at least what I'll be looking for tomorrow is, I will still have to worry about overall bearishness, but at least now we're not worried about buying too high. So in this situation, I just need to use what I call a failure pattern. In this case, it'd be a 2-try failure because, again, we're going to be pretty bearish in this scenario. But once those bears try a couple times, I now know exactly where their stops are, and we can use what I call a failure into pullback combination. Now, I'm going to keep this pretty simple here right now because I can't teach everything in these YouTube videos. But again, that failure into pullback combo. The failure needs to be a 2-try failure, right? Because you want to, again, rope in those bears, a lot of bearish momentum. You want to rope those bears in and use their stops, right, to fuel it going higher. We don't pick bottoms, right? Not in a big, strong move down like that. We let the bears trap themselves in, and we use our stops to fuel that move. So in the free trading course, you guys are learning about failures into pullback combinations, a failure into pullback combo. Or think about, too, if this was to really rip and run higher, again, be a great spot for a failure into maybe a trap, right? Or a pullback. Both of those will work right there. But think about that failure into pullback off of that low. And if you're watching for the first time right now and you have no idea what I'm talking about, that's fine. Remember, I teach all of these patterns, right? The trap patterns, the failures, the pullback combos. I have hundreds of examples of these patterns inside our free trading class, which I would highly recommend. I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will teach you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. It'll give you an easy roadmap to keep you on the winners each day. And then to help you make money, I'll teach you my 4 favorite entry patterns, things like traps, failures, pullbacks, strength moves. If you're taking too many losses, the markets are way too good right now not to be making consistent money. If you're sick of missing good trades right now, hit that link up top, take that free course. It is perfect for someone trying to make the jump into full-time trading. And also, too, in case you can't get that pop-up, I'll put all the important links you guys need in the description of the YouTube video as well. So if you can't get the pop-up, all the links you need, especially for the free classes, will be down in the description. All right, so the one thing to keep in mind is, right, is as we go higher, we don't want to buy high, we want to buy low with traps. As we go lower, we are virtually looking for the same thing, right? As it goes lower, until they take out that big low, we're looking for the bear traps to buy as low as we possibly can. It's a very simple game plan. Now, let's talk about as we go higher. Because who do you think's waiting up here? Who do you think's waiting up there? Bears. Absolutely, there are more sellers waiting up there until we can really knock those bears out, which may not happen until the FOMC. Could I short off the top? Absolutely. Absolutely we can. But we have to be careful, right? Because as we go higher, what's going to happen? We're going to start having a lot of short-term bullish momentum. So how do we pick tops in a short-term bull market like that? Let's talk about this. How about the Nasdaq? The Nasdaq is pretty similar to the Emini S&P. We're pretty bearish in the on the 60-minute chart right now, but I mean, is this a good place to sell down here? No way. We're at major support below a trading range. Remember, ranges act like magnets. Ranges want to rotate back and forth like this. We've completed our pendulum swing off the high. If you watched last week's videos, we talked a lot about range rotation back and forth here. So like I mentioned earlier, horrible place to be selling. We almost hope they do sell because we'd like to rope those bears in and squeeze this thing back up into the trading range. And again, as we start going higher, we have to anticipate that there's more bears up there, right? Because just like we are trying to buy bear traps, right? Just like we're trying to buy bear traps right now, you have to assume the sellers have the same idea on their side. They're trying to sell bull traps right now. I would assume above that 15,468 level, the Nasdaq, and of course there are similar levels on the S&P here. So we get a pretty good game plan if we go lower, don't we? Remember, as we're rotating higher, we look for traps. Okay, it's a very simple game plan there. If we roll over and go lower, what do? We look for traps. Exactly right. It's an easy one on the Nasdaq right now. If they do take out that big low, if they roll lower that big low, now it's 1, 2, try failure, right? Failure into pullback combination. Straightforward game plan, right? If we go lower. Now, as we go higher here, as you can see here, there are really 4 different ways I'll be looking to make money here for tomorrow. The first one is what I call a crown reversal. So if we run higher here, take out these highs, we have to assume every time we go above these highs right now, we're seeing more bears coming in because of the 60-minute chart and all the momentum on the 60-minute. So as we go higher, we have to assume there are bears waiting up there. But what's the problem? It's momentum, right? We have this bullish market. Again, short-term, of course. Short-term bulls into a trading range. They are trying to rotate where? Back up, take out the high, and then finish off what? Finish off that pendulum swing. So buyers are trying to finish off that pendulum, and I will talk about how to trade that breakout in a moment. I will talk about how to buy the pullback on that breakout. But if we do run into resistance overhead and we start to see the market struggle to keep going higher, a crown reversal pattern will always be my favorite reversal pattern whenever we have a bullish short term. But I like the idea of selling above the high because, again, of that bearish long term. Now, watch how this pattern sets up. This pattern will combine a failure pattern along with a bull trap. So as we go higher, again, we're anticipating now the buyers are going to want to pull back and keep it going, right? Want to take out that pendulum swing as we go higher here. If those buyers, if they begin to struggle, and they try to go higher once and they fail, they try to go higher twice, if we can get a bull trap above that high, that is a crown reversal. It's basically a 2 try for the buyers. So we know their stops are sitting right below that low. We know their stops are fuel to turn this thing right back over again. But you have to keep in mind, right, in this situation, I don't want to sell down here. Right? I don't want to sell like it will be a typical failure pattern because oftentimes there'll be a channel and you'll get trapped, right, in that short. If I want to sell short in a bullish move like this, I have to anticipate there are more buyers waiting underneath here. So therefore, I have to short as high as I possibly can, and that's where a bull trap comes in handy. We saw a number of these today on the Nasdaq. You can simply pull back. Buyers try once, they go lower, they try twice. Remember, you'll see a lot of examples of these in that free video course I mentioned earlier, but it's the same idea. It's the same idea, right? As the buyers struggle, we then look for those bull traps, right? Those bull traps above the high. And as you can imagine, right, a target back around the low of that channel, at the low of that move, those would be easy targets. And then, of course, if we do end up back around that low, what do? Exactly right. Bear trap, right? Bear trap back up into that range again. As it goes lower, we look for bear traps, right? Like we mentioned on the Emini game plan. Okay, that is the crown reversal. Now, a lot of times what happens is the market will run up and then begin to pull back, right? Like this. You'll get what's called a breakout pullback. Okay, breakout pullbacks are very, very common. Okay, very common. It's a range, right? And what will happen is they'll break out, they'll pull back, right? And they'll hold the breakout pullback. Now, what do you think is the best way to make money with this? How would you make money going higher? You know the answer already. It's a trap, right? As we're going higher, we look for what? We look for traps, right? As we're going higher, we're looking for those higher highs in price and that trap below that low, right? Ideally, I want to get into something before we take out that pendulum swing. Ideally. Right. So as we go higher, we look for traps. Could I sell it? Right? Could I sell it off the high? You could. How would you sell it? You would sell it with a crown reversal. Right? Buyers once, buyers twice. Remember how this looks? It's a lower low in price and a trap high. Right? That is a crown reversal. We just talked about this pattern, right? That is the pattern you you sell at the pendulum swing during that pullback. Now, I should also mention, right, in this particular situation where we have all of this bullishness rotating off the low, these crown reversal patterns, at least in my eyes, are half-size positions. Okay, they're quarter-size positions, right? Because it's one thing to trap the high, trap the buyers in, and back down again. Right? There isn't a lot of momentum in that situation. But if we end up blasting, right, and really rip, remember, there's a big range above us as a magnet on the 60-minute chart. So as we go higher, yes, I do like the idea of if buyers struggle getting that crown reversal. But again, with this scenario, it's very bullish. So you want to be a little bit careful on the position sizing on this, at least if you want my opinion, right? I'll be using a relatively smaller position, half size, right? Quarter size. The good news is if you're right about that reversal, you don't need a very big position. That's one nice thing about these crown reversals. You don't need a full-size position. If you're right about it, it will collapse and run back down into that trading range. It can be a very lucrative risk to reward ratio on that trade. Okay, so as we're going higher here, as we're going higher, right, it's traps on the way up, it's crown reversals on the pullback. And then remember, the top of this trading range is oftentimes a big time support level. The way I usually trade it is I'll wait for price to get below the moving average. I'm not trying to pick the bottom, right? Picking bottoms on a pullback is usually difficult to do. What I'd rather do is wait for sellers to come in and try to get this thing going short. And once those bears commit, bam, now you got them right where you want them, and you can use basically a failure pattern that we saw right here and right here, right? As we go up, we pull back under the moving average, bears get trapped, failure into pullback combination, right? So this is that sequence you want to look for, and this will also apply to the S&P 500. It's almost the same exact thing on the E-mini, right? It's the traps going higher. It's the crown reversal to call the pullback, to trade the pullback. Remember, half size, quarter size. And then again, we get under the moving average around the high of that range. I'm not trying to pick the bottom on that. I would much rather buy once those bears fail, because now we know they're already in, right? Now we know they're already in. Now, just a heads up on this, okay? This would not surprise anybody, okay? It would not surprise anybody if we saw something like this. We run all the way up, right? The buyers come in, they get trapped, and this thing just dumps, right? It dumps back in. Nobody should be surprised if that happens tomorrow. Why? Because the bearishness on the 60-minute, right? No one should be surprised at that. So we've talked about the crown reversal. What oftentimes happens in these as we go lower is guess. Just guess. Guess which entry pattern is the best one. What's the problem? There's always a problem, right? What's the problem? The problem is I don't want to sell low. Why? Because trend lines, right? I don't want to sell low. I don't want to sell it as it's going lower. What do? Remember, traps are the name of the game as we rotate back and forth, right? It's bear traps on the way up, and this will be a bull trap on the way down. Watch what I'll do on this, though. I like to draw a trend line off the lows, bring it up around the high like that, right? And then look for that first test off the top of that channel. Now, I love traps. Traps my favorite. You can probably tell that by now. However, we see a lot of times where this will go up, it'll pop up, get above the 21 moving average. The buyers will come in and try to run this thing. But once it rolls over and begins to grind down like that, that grinding motion usually means these buyers are done, especially if we get underneath that, you know what I mean? Underneath that high, which we would normally expect to hold as support. If it rolls off that high and starts to grind down, look, very big difference, right? See that one right there? That one right here? Okay, those are simply sharp pullbacks, failure back up again. Sharp pullback, failure back up again. Those pullbacks right there are not the same thing as a roll over, pop, and grind, right? Once it grinds, that's usually the giveaway. Nothing is ever certain, right? But that's usually the giveaway. If I can get those buyers to try to buy this thing right now, bingo. Now we got that failure pattern, which you guys know is the most common pattern. You guys are on that, right, in the free trading course. All right, so keep in mind, right, that would be the sell the V-top reversal, right? Sell the V-top. It may go straight up and straight back down again, right? Straight up and then straight down, pop, grind down, okay? So be aware of that, all right, guys? And as you can see, I like to go over different game plans, different scenarios. Nobody knows what's going to happen for tomorrow. I have a reasonable idea of what should happen, but the world is chaotic. The markets are messy, so it's easier to make consistent money every day when you run through some different scenarios. That way, no matter what happens, you are prepared, right? It doesn't make much sense to make predictions because if you're wrong, then what do you do, right? Anyways, now, the final one here is the pop and grind. Okay, my favorite dance move. I'm kidding around with you. A pop and grind. So, like I said earlier, I would expect bears to be waiting up here. I would expect sellers to be looking for shorts back down again. So we'll try to trap in those buyers up there. Crown reversal, the short back down again. But every once in a while, what happens is we get these V bottoms and this thing sprints, right, and just runs right back up into that trading range. We are anticipating eventually getting back up into that range, right? That is kind of the ultimate goal right now for both these markets. So If we do end up going higher here, right, we do know, again, the traps are the name of the game. But oftentimes when those ranges happen like this, oftentimes you'll get this pop up and it will kind of grind. Again, hence the term pop and grind, right? We see a lot of pop and grinds. Pop and grinds come in all shapes and sizes. The key is once they begin grinding like that, okay, remember, very big difference between up and then whoops, 1, 2, right? Very big difference there, right? Very big difference between up and then, 1, 2, right, and back, right? That's very different, okay? It'll pop up and it will feel like the sellers have left the building. Right? It'll feel like the bears went to lunch or, took the day off, right? It'll start grinding, and these are easy because once you see that grinder, what do you know? Draw that trend line off the highs, bring it down to that low, right? Now, maybe we're lucky on this. Maybe I can combine the high of that trading range along with the low of that channel. All right? Just be prepared. It may not, right? It may be much steeper. Okay, a lot of times these grinders, they'll pop up like that and they'll grind real aggressively running higher. What I'll do is draw that trend line off those highs, bring it down off that low. Okay, now again, you can look for that crown reversal up there, but usually a pop and grind it's usually on a mission now. It's oftentimes difficult to pick the top of whichever one of those tops will happen here. What I'll do is I'll look left, start finding swings. Usually the best trades on these are going to be a trap pattern or at least some variation of it below a prior swing around the low of that channel. All right. And again, it could be a trap like I love. It could be a failure into pullback combination, a strength move. Now, in situations like this, where's the target? It's pretty easy. Half off at a retest the high. Where's the runner? The runner is also pretty easy. Most trends are going to move in threes. Okay? Most trends are going to move in threes. The first leg is the measuring leg, and it's usually pretty symmetrical to that third leg. The middle leg, that second leg, is not usually very consistent with the first leg. Okay? So if you understand that basic principle, the size of that initial pop leg, take that size, pin it down at that low, and that will give you an idea. I can't give it all to you right now, but that will give you an idea of how far that trade will want to roll. In my experience, it's easier to make more money by getting better at letting your winners run than to dilute yourself and try to trade more markets or too many different setups. If you want to make more money, don't trade more often. Trade a bigger position size, right? Grow your account consistently, get a bigger position size, and get better at squeezing out more profit out of each trade that you take. All right, guys? So that's my radar here for tomorrow. Traps on the way up, looking for that breakout pullback, watching for that crown reversal, watching for that V top, right, with that channel reversal. And again, don't be surprised here if this thing rolls lower here and we keep looking for those bear traps for that run back up. I think I've covered everything at this point. If you got any questions, drop me questions in the comments section below. We've covered a lot of different scenarios here for tonight. I'm pretty confident and excited for tomorrow. Tomorrow's a big day because Wednesday is the FOMC. So tomorrow we really have some pressure to find. Not pressure, but we know that traders will have a sense of scarcity tomorrow to find some trades before they lose half a day on Wednesday. Now, the game plan is ready. Tomorrow morning, we'll trade this stuff together in our trade room. 8 o'clock Eastern time is the place to be in our members trade room. You know these markets are going to throw some curveballs at us, and tomorrow we'll roll with the punches. We'll roll with it. We'll find great trades and we'll have some fun together, trade along together tomorrow morning as well. I'll put all the important links I mentioned in the video tonight. I'll put the free class links. I'll put the trade room membership links all down in the description. I would definitely recommend take the free classes first. That way you learn the basic fundamentals of the strategy, and that way you know what to expect when you come out and join us every morning and trade with me in the members trade room. If you got any questions, if you need help with anything we talked about tonight, if you have any trouble getting into the free classes here, Just simply pick up the phone, call the office, send us an email, use live chat. We're always here to help. So if you have trouble, if you got questions, we're only a phone call away or a live chat away from getting those problems solved. All right, guys, thank you so much for watching tonight. Hope you had a great weekend. Hope you got some rest. Got a busy week ahead of us. I'm excited for tomorrow. Hopefully, I'll see you there trading right along with us in the morning trade room. If not, same time, same place. We'll come back tomorrow night and get ready for FOMC Wednesday. All right, guys? Have a great rest of your evening. Thanks for watching. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.